Well, the stock markets look like they're paused, but gold and silver break out, taking the baton from cryptocurrencies. And we're going to talk about that, the jobs report coming up, and so much more. All of that today on The Trade-Off. Well, hey traders, my name is Blake Morrow with Forex Analytics. And if you were expecting Chris Weston, don't worry, he's just out for the Easter holiday. He'll be back next week, but we've got a huge show in for you today. And we've got a special guest, somebody we don't see here often on The Trade-Off, but we should see more of. Let's bring in Quasar from Pepperstone. He's going to be joining us today. Hey, Quasar, how are you?
Hi there, Blake. Doing pretty good. Happy to be back here on the, how I like to call it, the main stage, the big stage. It's definitely a pleasure to be with you, Blake, and with y'all's audience. And yeah, there's definitely a lot of very interesting topics to talk about in the markets. And yeah, happy to be here covering Chris. I know you're going to be missing him, but as Blake mentioned, he'll be back.
Well, Quasar, it is nice to have you here, and it's nice to get caught up, because it's been a few months, and you know what's been moving is obviously equity markets, and they just continue to plow higher. It seems like we're kind of stationary ahead of the jobs report this week, but we've gotten these massive rallies in gold. Gold looks so strong. Silver's finally breaking out. How are you trading these markets from your side of the planet right now? How are you navigating through this very, very long risk scenario?
Definitely, I think you nailed it with silver. It's one of the charts that I was looking on earlier, and today's movement was critical, and it took place in very important price levels. I think that the market is taking on a very interesting dynamic where we're starting to see very big and important movements, maybe not necessarily on the equity front, but still definitely a market that it's very alive and interesting.
Well, we've got so much to knock through today, and let's just jump into Topical Thunder.
All right, Blake, I'm going to take the beginning of this section, and I wanted to talk about, I don't know how often you pay attention to crude oil, and I personally, it's one of those markets where, you know, I keep an eye on, but it's not necessarily the most important one for me. But recently, with everything that has been happening and the upside movements that we have been starting to see, or we have started to see, I don't know, I think it's starting to take a very important role, not necessarily just because of the movements that we have been seeing, but the implication of these movements that could have in a dynamic that's still the priority when we talk about the big macro, right? That it's inflation. Now, to considering what has happened with oil, I think when we talk about the US, the WTI, well, it recently broke above a key psychological level, which is $80 per barrel. That's probably a couple of weeks ago. Recently, one of the other levels that I was paying close attention to was 82 per barrel. And yeah, to me, that's kind of like a situation where, hey, could this be a point where we are continue on seeing rallies in energy prices, which eventually could complicate the situation for the whole inflation dynamic? And that's kind of like the question that I'm coming here to you, because as I mentioned, I'm paying close attention to it, and I'm starting to be like, could this be something that we need to start taking more seriously?
Well, you know, I'm glad you brought up crude. It's actually, I want to say it was one of the subject matters that we had in early February. I just pulled up the chart, looked at the notes that we had, and actually my note at that point in time is, could this be the Achilles heel for you know,
inflation dynamic,
for inflation, for Fed chair, you know, not just the Fed chair, but for central banks globally. And I do believe it's an issue, and it's not. It's interesting, Quasar. I was having a conversation with a hedge fund manager today, and he's like, even though crude oil is rallying, it's the inflation expectations that it gives people. And when it hits consumers' pocketbooks, there's only a small portion of the price in crude in that, because there's taxes and fees and, you know, everything else that's tacked on top of, you know, gasoline prices, crude prices. And really, it's only a smaller percentage of it really is affected by the price of crude oil. But as crude oil goes up and prices do go up, it does bring out that inflation genie. And we've seen with central banks, they've had a hard time wrangling in inflation. The Fed, even today, we had Fed Chair Powell speaking today at a forum, and he was discussing about how inflation expectations continue to come down towards their target. But we've seen it, and you know, we all look at the data, and the prices are stabilizing. And my fear is, and you know, we're going to talk about
where it should be.
Yeah, we're seeing crude oil go up, but we're seeing commodities as a whole go higher, which I think we're going to be talking about here pretty soon. So, yeah, I think crude oil is worth noting. And technically, once it broke 85.50 or is 85.50, which was its Fibonacci ratio, 618 retracement. To me, technically, it looks like we're going to 90 next.
Yeah, 100%. Personally, the technical level that I was considering, of course, we can throw a couple of Fibonacci levels in between, but naturally the big resistance ahead will be the highs of last year. So definitely something to keep an eye on, and hoping that it doesn't derail the whole disinflationary dynamic that we are hoping for, not just us, but central banks that are depending so much recently. But Blake, I think we have to cover the big one of the week.
Yeah, we do. Let's jump over to the next topic, and let's talk about non-farm payroll. You know, we were just reminded by the Fed chair today that the labor market, and I want to read his comments that came out specifically about jobs. He said, let me find the headline right. Oh, where did I have it? He basically said, oh, still room for Fed to cut rates, but he also said that the jobs report. Here we've been the economy has been short on labor, probably still is. So basically, he's saying that jobs are still going to be aplenty, and there's still going to be a lot of hiring. Now, he also is really focusing not just us, but market participants in really, you know, honing in on the jobs data. But we also should be aware that the jobs data is not, you know, the labor market isn't everything, but their eyes are on the labor market. So for us, the way the ISM came in today, we had the ISM services data. It came in a little bit below expectations. Prices paid also, but really we were looking at the jobs component. And the fact of the matter is it could set us up for maybe a disappointing read for non-farm payroll. But, you know, here's my playbook, and then I want to hear your playbook. Because the data came in weak, I think people are trying to lean on the dollar a little bit, expecting the jobs report to come in a little weak. We hit a new 2024 high on Monday following the ISM manufacturing data. Then we came off. The dollar's already weakening into this data. If the jobs report actually comes in better than expected, I think you're going to get an outsized move on a jobs report beat, a strong number. That's going to give the dollar bulls, well, it's going to squeeze all the shorts from this week, but it's going to get the dollar bulls reinvigorated. And I think, you know, we see some dollar, we could get to a weaker number, which sets up for a weaker dollar. But I do think the bigger response is going to be out of a strong non-farm payroll. How are you looking at NFP this week, and how are you going to play it?
No, 100%, Blake. One of the things for me heading up to this week was, and you know, by the surprise that we got on Monday by the manufacturing PMI, and then the JOLTS survey, and then I was like, oh wow, if this continues and we keep on getting a series of better than expected economic prints, which unfortunately we didn't today with the service side on the PMI. But if that had continued on, I felt like, NFP would have been a big component and a big key event for this week. Nonetheless, after today's PMI, I feel like, will it have some volatility around it? Yes. Having said that, nonetheless, I feel like it kind of like subtracted a little bit of the potential that it could have added to a series of data prints that could have had a bigger impact when it comes to like, will they keep on mentioning that they need to hold for longer before that they start delivering rate cuts? But nonetheless, it's going to be important. When it comes to the figure, I feel like, and if we see what different banks have been pushing when it comes to expectations, they're all across the board. Like you can see from Citibank, 150 to 145 from Morgan Stanley. I think as long as we stay around 200, which is kind of like what it's the mean market expectation. I think we should have some volatility, but nothing significantly. And we're just going to roll over to next week, which next week we have CPI. So, I mean, it's going to be interesting. I'm not trying to take any interest on it, but I feel like today's PMI service numbers kind of like cooled down a little bit the situation. It would have been a more exciting event if we had been kept on getting a better than expected numbers on the US front.
All right. Well, the NFP is going to be the showcase data of the week, and I believe on Friday, no matter what part of the world you're at, you should be in front of your computer, at least monitoring positions through that data. Why don't you take us to the next topic, Quasar?
100%. Definitely, it's another one that, I mean, I don't know how often you take a look into this space, but I feel like China so far this 2024 has been an area of interest, right? I mean, it always is. Nonetheless, I feel like when we think about what has been happening in China, we have gone from concerns to optimism to concerns. In the past, we have seen the Beijing being uncomfortable with what was happening with the equity front, and also like them trying to implement a series of measures to stimulate the economy. Eventually, they come with objectives that are quite interesting, and the markets are like, how are we going to achieve that? Is it like, is it something doable? All that has been surrounding the thematic when it comes to China. Nonetheless, I feel like this week, when we take into consideration the two economic prints that has provided China, I think overall they were really good. The PMI, the manufacturing side, when we talk about the U.S. services is the key component, right? When we talk about China exports, the manufacturing side of things is the big one. And it surprised. It established itself above expectations for the 5th consecutive month and in expansion territory. Yesterday, we had the service front advancing, establishing itself in the expansion territory. So kind of like what I'm trying to come here and ask you from a technical standpoint, it looks like the equity front is starting to, rebuild itself into a more constructive, positive price action. But I wanted to ask you, Blake, how are you evaluating China? Do you think that these last two economic prints are something that, add those last components to be like risk on, starting to take on, bullish positions on the China equity front?
Well, first of all, I think it's a great question, a great topic. If you look at like the China H shares, they're up like 20% over the course of the last couple of few weeks, I guess. And Chris Weston being here, and he likes to focus on the Chinese markets a little bit more than myself, because it's not something that I trade directly. I trade it through a proxy using the Aussie predominantly. But China's bounced, and it's bounced off some pretty critical support, but overall the market has been very much underperforming pretty much every other asset equity market around the globe. And so as a result, I don't know if I would be buying it after such a big rally. And I see what you're talking about. And I know over the weekend we had some decent PMI data, if you can believe the official Chinese data. But it was improved. I mean, it's 53 on the services PMI. I think 50.8 on manufacturing PMI. Both expansionary numbers, so better than expected. Me personally, from a technical point of view, I'd be waiting for a dip and seeing if we can respect the lows that we recently just had a couple of weeks ago versus chasing it at these levels. The other thing I need to say is risk appetite is still very strong globally. So because stocks where they're at, whether you're talking the US equity markets, you're seeing some of the European equity markets continue to break out. I would be hesitant about shorting China, but I'd rather buy a dip than trying to buy it at these levels, if that makes sense.
Yeah, no, totally makes sense. And to me, I'm still waiting for that last confirmation. From a technical standpoint, I don't bring that chart this week or this time. It's not like I'm going to be here the next week, but I've kind of like played it with a series of key resistance levels. And so far it has broken to the upside too, which will correspond to a short downward trend line and the Fibonacci retracement of 23% from the downward trajectory of the highs of 2023. But the trend line coming from those highs hasn't been broken yet. I personally feel like we're still waiting from a price action standpoint, that last trigger. But it's interesting. It's one to keep an eye on.
It is. All right. Well, I'm gonna talk about our last last topic, which is actually crypto. More specifically, I want to talk a little bit about Bitcoin. We recently just hit new all-time highs. We rallied above 70,000, and then this week we're failing back below 69,000. And the question that I have, that I'm asking myself, is, has crypto topped? And we've taken out some technical, ascending trend lines, whether you're talking about Ethereum, you're talking about Bitcoin. Relative strength, if you looked at an RSI on a weekly basis for Bitcoin, got at the same levels where we peaked back in 2021. It was the same levels RSI that peaked when we were at highs in 2018. So we hit those same levels from a technical relative strength standpoint, and we've been coming off. I actually think that Bitcoin is topped for now.
Yeah.
I say for now. And the thing about this, you get a false breakout. A false breakout tends to lead to a breakdown, but a breakdown in this case might be a move back down to 50,000. But you know what the crypto market is missing this time around? It's missing retail. When I say it's missing retail, it's missing the general public. And I'm not talking about retail traders. I'm talking about people, whether it's your friend, your family member. It's because if you go back to 2018, those are conversations that we were having with family.
Yeah.
You go to 2021, those are conversations you were having with friends and family. And my teenagers, when Elon Musk was on Saturday Night Live and he top ticked Dogecoin. This time around, we hit new highs. Those conversations aren't anywhere to be seen. So therefore, I don't think that Bitcoin is topped per se. I think that we might see a pullback, but I'm actually looking to buy a pullback because I still think it goes higher. How are you looking at Bitcoin right now at these levels, given the fact that it can't break back above 70,000 right now?
From a technical standpoint, definitely it's a little bit concerning. We have been in overbought territory for quite a bit. Additionally, if I remember correctly, I was watching or paying attention to a bearish engulfing candle. So naturally, and when you see it from a weekly standpoint, it's a false breakout. All that combined, to me, it's like, yeah, it could be a situation where we see prices come down, to some degree from where we are. Having said that, though, I feel like when you talk about Bitcoin, and especially around April, you have to include the whole thematic of the halving. For those that are not too familiar with what it is, it's basically you cut in half the remuneration rate that you give to those in charge of, in the mining process. That's due to happen in a little bit over 2 weeks. And when you get to see what has happened in the 3 last occasions, it has been the factor that takes place, or the situation that ended up putting Bitcoin in a substantial rally. On the first one, the one that took place in 2012, we saw Bitcoin rally almost 10,000%. The second one, 2016, it was around 3. And please don't quote me exactly on the precise numbers, but it's around that magnitude. The third one, it was around 700%. So naturally, it starts looking like there's a pattern behind it. So I personally feel like that could be a situation. And what could happen, and here's where I think that it could be the situation that takes place. We see the halving, supply gets cut. That makes prices go higher. Now the institutional front has the capacity to expose themselves in a better way, and that just makes momentum favor it. So I think, are we in a position where it could fall more from where we are? It could, but up ahead, I agree with you that there's room on the upside.
All right, very good. Well, I'm interested to see what charts you brought to the table, and I'm sure our viewers are as well. So let's go to That's a Setup.
All right, this week I'm gonna kick off with a chart that I personally, I've been primarily because of the main topic that I was talking about, and it's the Bloomberg Commodity Index. As you can see, it's been from 2000 and 2022 in a downward trajectory. Now, why I feel like it was important to share this one with you guys, because when you put a correlation, when you apply correlation of this commodity index with inflation, it's at a very high level. It's above 80%. Now, of course, we have to be a little bit careful when we talk about the commodity index, because when you throw into the picture, I was actually talking to Michael earlier. You guys are familiar with Michael. He mentioned just be careful, because you also bring into the picture about 20% of this commodity index, gold and silver, which naturally are not inflationary contributors. Nonetheless, I mean, you still have around 80% in this index that, are commodities, and naturally it tends to be a factor that affects inflation. And personally, it seems like we are starting to bottom, and we might be in a situation where we continue on seeing prices higher up ahead. How big could be the correction to the upside, or the movements to the upside? That's yet to be seen. I think China will be a big player in this whole situation, and if we continue on seeing a more substantial recovery when we talk about the Chinese economies, but nonetheless, I feel like it seems that it might be starting to bottom, and that could throw some complications for the monetary policy front. I don't know, what do you think about this chart, Blake?
Well, for our own my company's videos that I do every week, I talked about the Thomson Reuters commodity index, and what I referenced to that chart, which obviously is not the same chart as the Bloomberg one that you see here, is that the pullbacks were very shallow in the commodity space. And so I believe that is a risk. And I think commodities do look pretty bullish for the most part. Soft commodities might be where we won't be for the remainder of 2024, but that's what's going to overall power this chart higher. And I do think it looks constructive. And I do think, as we talked earlier today or earlier in the show, this could be a real big factor that plays into monetary policy. So, especially for the remainder of this year. So if you guys think that there are cuts coming and the market's trying to price that in, the commodities market is where your eyes should be focused on the remainder of the year. So great chart.
Thanks,
Quasar. Really like it. All right. My first play of the day, that's a setup, is going to be the dollar Swiss, or the Swissy. Now, most of you know I've been playing the dollar Swiss long very aggressively, or playing the Swiss franc short. Even last week that's a setup, I had the Swiss yen. It's been a real focal point of not only myself, but also Chris Weston. We've been really, really laying into short Swiss francs. Anyway, we've rallied quite substantially. We're working off some overbought conditions. I am looking for a pullback. We got a bullish outside day on the charts today. That's a reversal pattern on a candlestick pattern. So it should allow for some dollar Swiss pullbacks. I am looking for a pullback towards 89 cents. If we get a pullback towards 89 cents, I'm looking to be a buyer, because I think the Swiss franc, as I've said this entire year, it's going to be the currency you want to be short throughout most of 2024. And I think any pullback is going to be welcome. So how are you looking at the Swiss franc, and how are you looking at the dollar Swiss, or the Swiss franc in general, Quasar?
Overall, I'm pretty happy that you're presenting this chart, because it's been another one that I've been monitoring. Definitely after the Swiss National Bank surprised us, I think it was last week, with that 25 basis points rate cut. I feel like it just clarified a dynamic that we might be churning and looking up ahead into higher prices. The levels that I was looking into, from a technical standpoint, definitely there's you don't have it right there, but the downward trend line coming from the highs of 2023, it's being a price level where we are seeing that current resistance. And to me, it seems like as you are trying to play it, it's just gonna have a little pullback in order for it to continue on breaking up. I love it. I think it's a really interesting chart, and I agree with you. I think it's one for being bought to the upside.
Well, I appreciate that. It is refreshing. I'm not going to give it away, but your next chart that you're going to bring up, when it came across on my screen, I said, that's funny. My chart looks exactly like Quasar. So why don't you bring up your next setup?
100%. Yeah. This week I have the euro dollar, and I'm going to be completely honest, Blake. Over the last couple of weeks, when I will take a look into euro dollar, I was, especially from a daily standpoint, looking at a daily chart, I was a bit confused. I was struggling to kind of get a clear signal because to me, it was, oh wow, we're kind of like heading into lower lows, but then it was like not really breaking consistently to the downside, and then we will have a bounce. It was not until recently when I was like, okay, let me just take a step back, which I strongly suggest to anyone that it's trying to pursue a career in trading. Whenever looking at charts, sometimes when you get too into the detail, you might not get a clear picture, but it's good every now and then just to take a step back and see if you are finding something different there. And bingo, for me, it seems like we are trading right now in a consolidation pattern, symmetrical triangle, which I personally don't like it, just primarily because they tend to be the precursor of a lot of fake breakouts. Nonetheless, seems that it's respecting it so far. Interestingly, even though that we saw inflation in the Eurozone be lower today, lower than expectations, setting up in its lowest level in 28 months, we're seeing the euro, trading up high on after this report. But yeah, it's definitely right there. I think the key way to trade this one is not just to wait for a breakout outside of the pattern, but just wait for the generation of a higher high or a lower low within the last setup established within the symmetrical triangle. I like it, but I think we still need to have some confirmation for it to be tradable. I don't know. What do you think about this one, Blake?
Well, I'm glad you brought up this chart. It's going to come up again, so I'm not going to go into too much detail, but what I'm going to tell you is this. We do have the European Central Bank meeting next week, and I think that's going to tell us a lot about the future direction of the euro dollar itself, which this chart's going to play right into. So like I said, I'm not going to say too much because we are going to hit on this chart in just a few minutes. So with that being said, I want to take it to our last setup, which is going to be silver, massive breakout in silver. I was a little skeptical. I'm going to be the first one to admit I was very skeptical of silver because gold kept charging higher. Silver was it was stalling at 26 bucks. Today it broke out, hit the 127% extension, just totally, just big bullish green candles, hitting the tape. But now there is a little bit of a risk, Quasar. I tend to follow a lot of the times, I tend to follow sentiment. And so right now, the daily sentiment index, which is something that our company subscribes to on the side, it registered at 91, which means it's a that means everybody's bullish right now. And I can attest, I've interviewed a lot of people over the course of the last month that were just very bullish silver. So you got everybody bullish silver, you got it breaking out. I think the breakout is valid, but I can't chase a breakout when sentiment is at extremes, because that means like everybody's standing on the port side of the ship and the ship may topple over at any time. So therefore, I am looking to buy dips to 26 bucks. I think it's a very clear breakout, and buying dips is the way to go. But I want to try to buy it on a dip to 26 bucks, maybe 26 and a quarter. How would you play silver on a breakout like this? Do you think it just goes straight to 28? What are your thoughts?
I think it could. And one of the things that I was paying attention to earlier, because the other day one of our subscribers asked me for some analysis on silver, and one of the things, because it's difficult when you look at gold and you're looking at new records and you see silver being so far behind. Well, let's see how bad is the situation from a relative analysis, and it's cheap when you compare the two. Like, it's at a really low level, silver compared to gold. So I think it could be one that it just keeps on going, and maybe this one is worth chasing. I know that you're hoping for some sort of like retracement that allows you to get into better price levels and maybe not align with the crowd. But this might be one where you just have to chase it.
Sometimes you got to hold your nose and just jump. And here's the thing, Quasar, and I have to say this. I say this out loud because it's the way that I trade. I try not to chase price, because if I don't chase price, I'm never the guy buying the very top of the market. Now, I miss trades by doing that. I could very easily just say, well, I don't want to buy silver, and next thing you know, it's trading at 32 bucks, and Quasar, you're going to be like, I told you so. But but that's the way I trade. I try not to chase price because the worst feeling to me is being the guy that just top ticks the market. Like, fine, I get in, and then I get in and it goes down. So to avoid doing that, I just don't buy. I don't buy into the momentum. I buy on pullbacks. And like I said, sometimes I miss trades, but that's the way we trade the markets. And the thing is, there's no one right way to trade the market.
100%, yeah.
As we say, there's so many ways to skin a cat. Why I would skin a cat, I'm not really too sure, but there are many different ways to do so.
There you go.
All right, Quasar. Hey, what everybody's been waiting for, they want to hear what your play of the day is. So let's get to it.
I'm going to go for Bitcoin.
Ooh.
Let's go.
What are we doing here?
Well, here's what I'm looking at. You could be, I mean, when you see it from like a pattern standpoint, a bullish pennant, it's quite similar than a, symmetrical triangle. What you guys have to take into consideration is the previous action, right? And when you see what has happened in Bitcoin, pretty much all this 2024 has been a continuous upside. Now, would I buy it right after just break? Similar like with the case of with the symmetrical triangle, I wouldn't just buy it on breaking the line. I would like to generate a higher high above the ones registered approximately around the end of March, close to $72,000. And if that's the case, to me, hey, we are breaking from this continuation pattern. We are getting back to generating higher highs. So that's a go for me. Definitely, when you're trying to trade things, it's all about risk-reward ratio. So I might be totally wrong on this one. So I will get off right away if we try to push for a higher above 72, and then we have some sort of correction below 69. That will be the point where I will get off, and definitely I will go for a 100% expansion of the movement of the price action that took place to the upside from the ends of February. And what could be the catalyst behind this? I think the halving. The halving is what could be the driver there.
Well, I see why you brought that up today on the halving, and I'll tell you, it looks like a pennant. It's a bullish pennant as of right now, and I think what you're saying is prove Quasar wrong, and until he gets proved wrong, it looks like higher prices are where we're going, right?
I love what you said right there, Blake. As of right now, yeah, it could, and that's very important when you talk about patterns. Patterns morph into different things, and you have to be able to adapt to what it's taking place at that moment in time.
And right now, you succinctly put it that it is really just consolidating at its highs, and you need to respect that, which I respect as well. So I'm going to bring you my play of the day, which is the dollar yen. And I know I've talked about this in the past. I know, but I had to revise my playbook just because even after the ISM, even after the weak ISM services data today, the dollar yen could barely get back down to 150, 150. We all know there's a big barrier line in the sand at 152, and those pullbacks have been very shallow. The bull flag pattern still completes at 153.50. What I did is I drew a quick fib, just extension, so you can see the last leg that we went lower down to that is the 200 DMA is that red moving average. Right when we tested that, the 127% extension is right where we're at right now, basically a 152.12, 152.12. I mean, we've basically got to 152. We break above that. The next stop is 153.66, which I think would be close enough to completing a bull flag pattern. Therefore, if we break out above 152, look for a reversal closer to 154, and on a move up to 154, I'm going to be on the short side, especially if we can do that ahead of the jobs report this Friday. So there you go. That is going to be my play of the day. And I'm not long. I'm just sitting in it. I'm waiting. Sometimes we got to wait.
Patiently waiting.
Hey, Quasar, I just want to say it's really been a pleasure having you here. And I'm sure most of the viewers, let me rephrase that. All of the viewers are really happy to see you because you're not a face that makes too much of an appearance here. But when Westy's out, I am sure glad that you're here, and I'm sure those traders listening in are as well. So make sure you comment down below, tell Quasar what a great job he did, and make sure you give us the thumbs up that you liked this video and you enjoyed the trade-off, and jump down in the comments and let us know what you think. And with that being said, Quasar, thanks for joining us. And everybody, thanks for joining us on the trade-off. We'll see you next week.
See you next week. Thank you so much, Blake.